Hey, everyone. Welcome to the latest podcast episode. This is your host, Terry Knight, and I have a very special guest here today, Jeremy LeMere. And his background is very interesting. He's a real estate investor. He operates a lot of multifamily and self storage facilities. So I'm eager to learn more about his background, his experience, and how he's making great money doing it and just building a business, man. So I appreciate you, Jeremy, for coming on.
Thanks for having me, Terry.
No problem, man. So first and foremost, let people know who you are, Jeremy, and we'll go from there.
Sure. I'm actually up in the upper Midwest, up in Green Bay, Wisconsin, the greater Green Bay area. We have our portfolio primarily based in our region of the country. So we have self storage units, as you mentioned, as well as multifamily up in the Wisconsin market. I've participated in some projects outside of the Wisconsin area, and more or less the goal has been in those projects more of a kind of a fix and flip activity or passive income standpoint from outside the area.
That's so cool. How did you start your journey? Like from the beginning, like what were you doing before you got into self storage, multifamily, all that
Sure,
cool stuff
sure.
in between?
Yeah, so I actually, when I was growing up, my parents had some duplexes, but it was a
Mm.
very active owner participation kind of level, and that was really, excuse me, the only way that I knew how to handle real estate. Very hands on, and I grew up very hands on in general. Um, the duplexes that we had, our parents involved us in cutting the grass and things like that, where we actually bought the lawnmower and really had our first taste of the entrepreneurial way through kind of managing books for what did it cost to buy the lawnmower, what are we getting paid to actually cut the grass, and what is the outcome of that. And we did
Mm.
that through programs, with 4-H and FFA. So that was kind of my first touch on the business environment as well as in the real estate space. As I got older, I actually went to school, eventually kind of got the bug to go to school for engineering. And it was a really good fit for my hands on approach to things and wanting to figure out how things work and kind of put things together. So I did mechanical engineering and was in that space for over 20 years in overall. But about halfway through that entrepreneurial piece kind of kicked in, and in that mindset of I want to learn more about the business kind of thing, I went back and actually while going to while working full time, still went back for my MBA. And after about 4 or 5 years of working through my MBA, it really changed my perspective on evaluating and making decisions in what I kind of did day in and day out. I really I went from more of a engineering perfection standpoint of like what's the best solution from an engineer's perspective to what's the best balance of the business perspective of that engineering, meaning that in some cases you needed perfection to deal with warranty related things, where you
Mm-hmm.
didn't want to have things come back or recalls or anything like that. But at the same time, you knew you wanted to get to market with the lowest kind of cost to deliver it and still meet the customer's needs. So that kind of changed my thought process there. But I also did my MBA basically right at the start of the Great Recession. So I had just
Mm-hmm.
enrolled and decided to go forward in 2008, right when the company I was working for, we had tuition reimbursement kind of thing. So it was like, hey, this is going to be really nice. We'll do this over a number of years, and it'll be primarily paid for. But when the Great Recession kind of hit in 2008, all of that tuition reimbursement kind of got pulled back. So ultimately, I had to decide to continue that educational process without any support from my employer. So I decided to do that, and very glad that I did because in the end it worked out really well. I finished up just three years later, about 2011, and when
Mm-hmm.
I finished with that, it really had changed my perspective on being able to run financial analysis and things like that. And with the Great Recession going on, I actually started to look at residential housing again, right? Because it was substantially distressed. Anyone who owned a home knew that they were probably upside down unless they had been in it for a long period of time.
Mm-hmm.
And it really afforded the opportunity to see that it was going to cost you significantly more to build anything compared to buying existing assets. So at that point, we really started to acquire investment assets, multifamily, specifically duplexes at that point. But then eventually we scaled into multifamily assets. So coming out of the Great Recession was really about redeploying our capital that we had left. Started pulling money out of the stock market, investing it in more and more duplexes, as many as they would let us borrow against. We found a way thereafter to actually leverage retirement assets that I had from previous employer, and that afforded us the opportunity to expand our portfolio a little bit more. And then we ran out of capital. And when we ran out of capital, we started into the fix and flip side of activities to create cash, right? So that we could buy another asset that we could hold long term. So we would flip a house, buy another house, and effectively do the BRRRR strategy on it, buy another property, flip it, and then turn around and buy another rental property, and put it into the market for rentals. So we did that for a little bit, and then appreciation started to happen. And when that really took off in our market, it afforded us the opportunity to just go after acquisitions. So we could just keep refinancing the properties that we had bought and rehab previously and pull the capital out of them and continue to expand our portfolio.
That's pretty cool. Yeah, starting from the bottom and just building up slowly.
Yep. Yep.
Um, yeah, Jeremy, you mentioned coming out from the recession, you invested in duplexes. I guess from that time frame until what do you guys still get duplexes, or you guys focus more on multifamily, like
I,
multifamily commercial?
we've actually we kind of bundled all of our duplex portfolio together and did a land contract on that. So effectively seller financed that. So that was great because it ultimately, I was reaching the point that we have, since then, we have done some additional syndications with self storage and such. And the workload became more substantial than what we wanted it to be. So
Mm-hmm.
we took that property package and ultimately bundled it together and offered it to a buyer that allowed them to get to full scale right out of the gate. So it gave them the opportunity to actually leave their W-2 job and enter the real estate side full time. So it was great for them. It worked out well for us because it worked us towards larger scale and managed our workload overall.
That's
So
pretty. Oh
I would
wow.
still do duplexes.
Mm-hmm.
It's an interesting dynamic, duplexes compared to multifamily. Duplexes are more like single family houses. They can be, uh, I'll say, less hands on, less day to day activity. In multifamily, there's a lot more common areas and
Mm-hmm.
general maintenance that you need to do on the building, the property, and the tenant base tends to be newer and less ownership oriented. In a duplex, um, the tenants, they take ownership of the property. They're cutting the grass, they're shoveling the snow. There's just way less routine activities that you have to deal with. Even from a landscape and maintenance, they want it to look nice. They'll take and kind of do the home ownership mindset. It's the first. It's really the step that they're taking towards the potential that they're going to own their own home, and they start to take that care in it. You know, I always looked at duplexes from the standpoint of, if I pick the right tenant, the next step for them is the fact that they're actually going to purchase a house and move out into a home. And if
Mm-hmm.
we've got the right tenant base, that should be the end result of our tenants when their departures occur.
That's so cool. You mentioned bundling up your whole package of duplexes and all that stuff and sold it, right, as one
Yep.
thing. How much was that generating, I guess, for someone to leave their W-2? 'Cause that's a big deal.
Yeah. It was a large portfolio. I mean, it was over $5 million worth of the assets. It's a substantial amount of revenue that we handed off, but it was the appropriate thing to do. We were adding self storage units, so we
Mm-hmm.
were able to kind of shift our management activities over to that, and afforded them the opportunity to take on the prop. They internalize the property management
Mm-hmm.
and the maintenance activities.
Mm-hmm.
So the investment itself was a long term strategy for them, but the short term strategy for them was to be able to utilize the property management fees and the maintenance activities in order to engage themselves and I'll call it keep them supported personally, and be able to be their own boss. Right now, they can choose when and where they're going to be, when they want to work on the critical items, and what they want to farm out to others from a contract standpoint to take care of things. So, gave them much more flexibility from a vacation and lifestyle standpoint, also.
That's so cool. And I mean, you sold that and you reinvested that more into multifamily commercial. Like,
Yep.
how does that work, man? Like, what was your first deal and how did that go about?
Yeah, so we started purchasing more commercial properties, and we also had the mindset that we didn't necessarily want to buy more labor intensive activities or more management intensive activities. So we started to really push more towards the passive investing side. So we invested in three or four limited partner type investments. So a syndication model, but we were actually more on the limited partner side than on the general partner side, where we were going to be active in it.
That's so cool. Um, well, how many, well, I guess what's your portfolio looking like now from multifamily side? Like how many units we
Yeah,
talking?
so we have about we're invested passively in about a little over 600 units. We
Wow.
still retain assets, a small portfolio of multifamily assets that we personally manage, and then we actually kind of are gearing more towards the commercial. And right now, we still have a significant. We're just over 1,000 self storage units yet in our portfolio that we actively manage. So that's kind of the next wave of whether we continue to expand that portfolio. We have some opportunities to build more buildings on some of our property.
Mm-hmm.
And if we do that, we'll stay in the self storage space for a period of time to kind of fully develop that market and get it leased up. Short of that, we'll also entertain the sale of those assets, as we're hitting kind of the 5 year mark on several of those assets. And the investors are interested in knowing what the market may bear. But as we all know, at this point in time, interest rates are kind of driving things,
Mm-hmm.
driving you to hold things if you can, in order to kind of facilitate the lower rates in the future, which can get you a higher offer. It, when you take and divert cash flow to interest payments, it's quite detrimental to the valuations.
Yeah, definitely. I hear you on that one. Well, that's the next thing. I feel like self storage is like the next big thing. Was it like less maintenance, less like maintaining, I guess you would say, depending on how you kind of structure it and how you get it. But you
Yeah,
guys mentioned you have over 1,000. Like, what made you want to get into self storage, other than
yeah.
what I
So
mentioned?
ultimately, yeah. So we entered self storage in 2020. We really started looking at it in
Mm-hmm.
2019. And the reason that we really started looking at it hard is we had been buying multifamily assets, but the prices were going up so substantially. Cap rates were shrinking substantially. And when we started looking at self storage and we looked at the complexity that we were dealing with, yes, it's a different asset class. You're managing it differently. But the reality was cap rates were well over 100 to 150 basis points better than what they were for multifamily at that point in time.
Mm-hmm.
So the returns that we could get for ourselves as well as investors said go after self-storage. Um, what's different about self-storage? I would say there's less emergency activity, right? You don't have water and things like that that can be problematic from a leak or toilets or anything like that. But you end up having to have many more units in order to equate to each individual rental unit that you would have for like an apartment building.
Mm-hmm.
So where you have $85 rent for a storage unit, you might have $850 rents for an apartment. So you have to have 10 storage units for every one apartment, to generate the same revenue.
Mm-hmm.
At the same time, when you start doing that and you take 100 unit apartment building or 1,000 units of self storage, you start recognizing there are other operational things that are going on, right? People still don't pay the rent. You have to auction those units off. You have to
Mm-hmm.
follow the legal process to do that. You've got other situations that occur. There's uh, uh, the less glamorous side of it, which is right along with the apartment side. But you have homeless people that will
Mm-hmm.
move into units. You have people renting units legitimately that are living in the units. And then you have people just misusing the units for what they're intended, right? If they want a commercial space, they may rent a storage unit, and you've got to manage that commercial. Their desire to make it a low cost commercial operation while your insurance doesn't allow it to be a commercial operation, meaning that they're doing day-to-day business out of the property, but yet there's no facilities there. They could be You could have tenants running rummage sales every weekend out of there. Let's say they go buy things at rummage sales, and then they turn around and they're selling the stuff off, that they get really good deals on, and then they're selling it on Facebook or whatever. But they're kind of turning your storage units into commercial market spaces. So you end up with a different set of things to address and handle that you have to kind of manage over time. And like I said, with that 10-to-1 ratio, you start to kind of approach some similar management requirements in order to make things operate day in and day out. But there's certainly, you're not doing rehabs on units. You're not
Mm-hmm.
worried about the carpet when they move in and out, but you are worried about cleaning and sweeping out the units and whether they left motor oil on the floor behind and things like that.
Yeah, I bet. Do you guys well, is the self-storage unit you guys currently own, is it AC, like indoor, or is it outdoor, or a combination of both?
It's I'll say outdoor. It's non-climate controlled
Non-climate.
for the most part. We do have some climate controlled space, but it is not a predominant portion of our portfolio.
That's so cool. And I would think with each of these locations, you guys have staff in place. I would think to kind
So
of help manage, or how does that
yeah,
work?
so you would have to have a very large operation to warrant having staff on site. And what I mean by that is you need other revenue streams in order to be cost competitive in the space. We utilize software ultimately for folks to rent units 24/7. So they're
Oh,
able to get to the property and be assigned a unit. They sign the lease, they get assigned a unit. They're able to go to the property at any point in time and have access to it, put their lock on to the unit, and store their stuff. So if they pull into town at 2 o'clock in the morning and they need a place to put a bunch of stuff out of the U-Haul, they can rent a unit, move in, and be all set, even while it's weekend or night without staffing. And obviously, you can imagine if you don't have any staffing working at those odd times, it's a much more competitive price point that you can provide. So there are facilities that certainly have those resources. They tend to operate other storefronts while they do that, meaning that they may actually run, U-Haul is a common one. They may run other
mm-hmm.
services that utilize the individual's time most of the time, while actually renting storage units out is a very small portion of their time.
Oh, cool. Um, 24/7. I mean, that's cool. Someone can just spool up a lease, sign it, and roll up to the self storage and start
Yeah.
unpacking. You
Yeah, you
guys
don't
use
do that
like
you don't do that in the apartment space.
no, of course. Oh yeah, definitely not. Definitely not. It's different, right? It's a unique one. It's very steady, and
Yeah.
there's a lot of growth in that side of it.
Yeah.
Do you guys use like digital locks? I would assume when
There are
people.
the technologies are out there. We don't employ those. Obviously, again, those all add cost in the operational side. So if our tenants don't necessarily find the value in that, it's not an advantage for us.
Hmm.
We tend to let the client bring their own lock. We recommend that they use a specific style of lock for the highest and best security that they can get on the unit. But generally speaking, we don't typically provide the locks, but we do have other storage facilities in our market that do provide some, I'll call it higher end technology lock activities at their facilities, but we haven't found it to be a competitive advantage at all.
Gotcha. So how does that work then? Like let's say I rent one, I have to go up there and start unpacking. Is there already like a pre-lock there, or
Yep,
is there someone there on staff to kind
it
of
can be.
like?
Yep. So like our system will generate after you sign the lease and complete and make your payment. Ultimately, you're triggering a text message or email to come into you,
Hmm.
and that's going to have the information regarding the lock information. It'll also have,
Hmm.
like, if you have a fence around the property and you have gate, it'll provide you your gate code in order to get into the property.
Oh, nice, fancy.
Yep.
You brought up a good point, Jeremy, about other streams of revenue for self storage. Did you guys implement anything else, or is it just straight self
Yeah.
storage and locks?
Typically, kind of on the more passive side of self storage, the largest revenue benefit that you're going to get is typically going to come from the insurance that you can either offer
Hmm.
as a choice, or you can force the insurance offering on them, where they either need to have their own insurance or they need to purchase the insurance that you offer through your platform, your online uh, portal.
Oh,
So
wow, really?
that's usually one of the highest. And then so they're purchasing that insurance. The insurance company is going to do a revenue share with you
Hmm.
for using their insurance as the forced offering through the platform. And there's a couple different companies that will partner with you in order to offer that insurance through your leasing platform.
Do you think? Well, has any tenants had to use the insurance for emergencies or bad stuff that's happened in
Yeah,
your
we've had
experience?
several that have had claims on the insurance before. There's two important parts. One is they obviously need to secure their belongings. Um, as much as it sounds funny, but I can go out and do audits, and I can show you units that just don't put locks on their unit. It's like they put their stuff in it, but they just chose not to lock it up. But we do audits in order to help validate when things are secured and when they're not.
Hmm.
We document that, so if there is a claim and they didn't lock their unit, that could be problematic. Um, the I know it's always interesting how on some occasions you can have a break into a unit and it'll be a very specific unit. Typically, if someone's looking for some valuables, they're going to
Hmm.
break into several units until they find what they're looking for,
Yeah.
unless they knew what they were after, and they only break into one particular unit on the whole property. So you've got 150 to 200 units, and they pick that one unit. That's pretty suspicious.
Or maybe they were watching them for a while, right? To kind of
It,
figure out who to go after.
or it's somebody they know, right? Those are
Yeah.
all very, very key pieces of information for the insurance company as well as the law enforcement that is going to be working the case around that. So
That. Wow. Yeah, I'm not surprised, but how often, I guess, in self storage, in your experience, you guys have to auction off someone's stuff?
we typically, I'll say, generally throughout the year, we're doing auctions almost monthly when we're running
Oh,
a
wow.
thousand units, and we may have anywhere from 4 to 10 units in a month on that
Jeez.
on that path.
Really?
And what I would say is that out of 10, two of them or 20% might actually end up auctioned when all is said and done. When push comes to shove, folks find a way to get the unit paid for in order to retain their stuff,
Mm-hmm.
unless they really either lost control of their financial situation and didn't have anyone to lean on,
Mm-hmm.
or they're just done with it. They just were like, we don't want it for the amount we owe. So
Gotcha. Okay. Wow, that's crazy. Um, what's your preference, Jeremy? Because you do multifamily and self storage. Do you like one over the other, or do you just kind of like both? What's your take?
I I think they're both very favorable. I think what's more important is recognizing your tenant base, and what I
Mm-hmm.
mean by that is, um, while the returns may drop off slightly as you go up in the credit quality of the individuals renting units.
Mm-hmm.
So B class and A class apartments may have a lower rate of return initially when you view it on paper, but there's significantly less management activity or headache that's generated by the tenant base. When you start
Mm-hmm.
getting into lower C tenant quality, you're going to be dealing with a lot more delinquencies and job issues and move-ins, move-outs that are just random. People plan less. They react to what's happening in life rather than planning, kind of thing. So there's less visibility or foresight on what's going to be going on. Self storage has both realms.
Mm-hmm.
You have folks that are getting kicked out of apartments, putting their stuff in storage units, right? And then you have people that are storing their expensive toys in the storage units. So you have higher end tenants and you have lower end tenants, and you have this mix that's going on that can generate headaches for you that you're really not filtering for, because we don't screen tenants, right? There's not an application process, as
Mm-hmm.
we talked about. They just log in, or go in, create a user ID, log in,
Mm-hmm.
rent a unit, and start storing their stuff there for those various different reasons. And you can end up with a very dynamic tenant base from that. So, like everything else, you really need to know where you're buying that asset and what your predominant tenant base is going to be in that asset class, in that location.
Gotcha. And Jeremy, what's your goals, man, for this year, for your companies and for self storage and multifamily? Do you guys have anything you trying to
Yeah,
hit?
yeah. I've really, last year we went through some challenges with one of the projects that were kind of the LPGP side of the business, and it's not a backyard project. So I've had to support that project quite a bit. So I've been traveling a decent amount to handle those issues. And 2025 is about kind of streamlining and recentering our business to get control back and get that freedom back that we sought after when we got into real estate in the first place, where
Mhm.
we're in better control of our time instead of the project being in control of us. That's been the biggest gap. The only really good news in it is, while we had a project that was having problems and having to support significantly, um, the good news is the rest of our operations were running streamlined enough that we were able to address those issues with that other activity, that other project. So in our case, the ongoing storage unit and multifamily activities are just kind of routine, and we're able to address those situations or those activities in the normal course of business with a pretty light touch, right? Meaning that they're just sustaining themselves. We just have to keep the activities going. We have to
Mhm.
keep the delinquency honest by going through the auction process. And if we do that, we can keep sustaining very high occupancy levels and very, very good collection levels. So
Gotcha.
2025 is about kind of recentering and getting
Mhm.
back to where we ultimately wanted to be in 2023. But with the interest rate changes and the pressures on projects related to interest rates, it's been a challenging 24.
Yeah, for sure. I could say that. I've seen that with a lot of people in general.
Yep.
I forgot to mention, Jeremy asked this question for auctions. Do you guys get a rev share for that as well, or is it
Yeah,
not?
so on the auction side, the auction company gets a revenue share. So they're typically going to be at 20% of the funds collected.
Mm,
So in our case, we get what's left after that 20% is deducted. So
gotcha. All right, that's good to
yeah.
know.
Um,
Um,
if you look at it overall, you'll never recover your entire rent. You're still going to have
mm,
some loss there. The key is controlling it, because whatever the contents are that are in the unit, the tenants are either going to pay up their rent in order to
mm-hmm,
keep their goods, or you're going to sell the items, and any overage above and beyond what you receive, that any overage that you have beyond what they owe, you need to send back to them anyway. So you're capped at your upside, right? You owe the tenant the extra dollars. So
mm,
you never get an overage, but whenever things don't sell for the amount that they still have due on rent, is a shortfall. So you're still going to have delinquency with really no opportunity for upside. But the reality is that's why we do auctions very frequently. So they
mm.
don't go 3, 4, 5, 6 months without paying rent. And then they just say, you can have it. And you don't get enough money out of the stuff that's in the unit
Mm,
to recover the rent. So you want to contain that loss risk, because of those limitations, and get through the processes, and keep everything current.
gotcha. And with 1,000 self-storage units, what's your occupancy rate at the moment? I'm pretty sure it's high.
Yeah, we run very high typically in our market. It's always been favorable. We're up in the upper 90s. So anywhere
Wow.
from 95 to, some of our sites routinely run 98, 99%, because there's constrained capacity in the market. But our market is similar in the multifamily space. The investment view within our markets tend to be more conservative. People don't want to build assets and turn around and have 15%, 10 to 15% vacancy.
True.
So we tend to operate in the mid 90s from a multifamily standpoint. We tend to operate in the mid 90s for self storage. And when people start building too much, you're going to suffer in more ways than just one.
Gotcha. Yeah, like the reason why I'm asking about all this self-storage stuff, like that fascinates me, and I've seen good margins and profit and just how
Yep.
it's managed. It's just like golden.
Yeah.
Are you guys afraid of competition? Like you mentioned, like as far as when they start
It's
building one that's bigger,
Yes.
maybe better, maybe climate
Yep.
control, all this stuff that's happening. Like, how do you
Yeah,
handle
I mean,
that?
there's a huge price difference between climate controlled and non-climate controlled. So
Mm,
that competitive level is less so than it is about when someone builds an asset and is going through the fill stage, and they underprice their units to get them filled, and then
mm-hmm,
ultimately they have a carrying cost of a newer building. So typically they end up raising the prices later on, and the tenants
mm,
don't want to move because it's a painful process to pick up all that stuff and move it. Right? There's a cost
yeah,
just to doing that, so they don't. So they do have an advantage by underpricing the units, getting them filled, and then turning around and raising the price. Usually, when that starts happening, some of those folks will leave, and they will move to another existing asset that's still at a different price point. That's a reality, but um, there are folks out there that are into that build, lease up, and sell mindset. And
mm-hmm,
if they're doing that, they can substantially hurt a market for the long term, if it's not substantially growing from a residential base where they'll actually fill all of those units up over time with development. So um, overcapacity is a long term problem, and it can substantially hurt people who recently purchased assets and are stuck with their basis, and a reduction in price or competitive occupancy issues can really create a massive undercurrent for them that they may not be able to fix. What I would say is there are still economic forces. Um, People eventually, we're starting to see it. We have over the last 12 months been seeing the pressures of capital or cash flow limitations of individuals out in the marketplace. So there is a reduction in the number of storage units that people actually want to rent. So people are
Mm-hmm.
deciding to consolidate things, move things different places, get rid of personal belongings because they don't want to pay the $100 a month for that storage unit anymore. And that is creating some softness in the market from
Mm-hmm.
a leasing demand standpoint. Um, and it also creates a influence on the delinquency for those that aren't responsible enough to actually liquidate their items or move on or consolidate with someone else. um, they ultimately become delinquent, so you start dealing with more delinquency.
Oh, it's great to know. Jeremy, do you have any kids?
I do. I have three that are in high school, nearing the end of high school. So, yeah,
Hmm.
they're well aware of the activities and what real estate entails. I mean, my kids have been part of the cleaning exercise in tenant turnovers and things like that. So,
Oh, nice. Hands on.
yeah,
Hands on. That was going to be my next question, like, because they're ending their high school years, which is amazing. What did you teach your kids that you want them kind of to instill and learn from the real world experience and pass on to their kids?
yeah. Um, there's I guess probably three or four primary things. One is that not everyone takes care of things the way that you necessarily do. So when you
Mm-hmm.
go into a storage unit or to an apartment or something like that, and you're responsible now for cleaning up after the tenant left,
Mm-hmm.
not everyone treats things the same as what you do. That's one, and you need to understand that. Two is hard work that it takes when you have tenant turnovers and things like that. It's a job you got to get done. You've got the time frame you got to get it done, and you have to meet those commitments that you set up. And it has a financial impact if you don't.
Mm-hmm.
Either you can not rent a unit for another month, so you can take your time to empty it, but it has an economic cost to do that. Um, the understanding of the elements of the business and trade. None of my kids are headed towards real estate at this point.
Mm.
None of them.
Okay.
But the reality is, I wasn't either. I wasn't either. Right? I was exposed to rental properties and
Mm-hmm.
didn't really understand it, the intent of it, and that sort of thing. Or the engagement with it. And when I left, I went to college and was completely on a different track. They have way more exposure than I did as a kid in the process because we had significantly higher levels of assets
Mm-hmm.
and more diverse assets than just duplexes. So, what 5 and 10 years looks like down the road for them will be very different, right? They got to get stabilized on what they want to do from what they like to do for a W-2 job potentially down the road. And then they can start to dabble as a hobby, just as we did when we first got started. Dabble as a hobby, have a couple properties, and then figure out I don't want to do that W-2 anymore for someone else.
Mm-hmm.
And I'm going to make a decision. Either I'm going to run a business in my W-2 space, which is complete, right? You can have a business and other things than real estate.
Yep.
Or if I'm not going to do my own business thing, then I may do real estate as a side thing to complement my W-2 job because it all fits together. And I know it's the best way to become financially free long term.
Cool. I love it. All three takes on that one. Jeremy, what's the best place for people to learn more about what you can do, what you guys
Sure.
do, and all that stuff in between?
Yeah, I mentioned and talked about the fact that we do syndications more now than what we had in the past,
Mm-hmm.
and we will continue to do that. We run under the Navigator Wealth platform, and so that's navwf.com, and that's where you'll see we do hard money lending activities. We're doing
Mm-hmm.
built to rent type stuff. You'll see the self storage stuff there,
Cool.
and that's kind of what our kind of umbrella is going forward from a syndication standpoint. And you can always email me at Jeremy, as on the screen, Jeremy at navwf.com.
Mm. Guys, you heard it first here. I'll have the links below. Jeremy, to end the episode with each guest, I like to ask them a question to end the episode. Sometimes I don't remember it, but um, the last question would be what keeps you going every day when you want to give up? Whether it's, beginning of your time now, middle.
Yeah, that's probably my one of my biggest strengths is just finding the way to have tenacity to keep working on things and
Mm,
make difficult situations achievable and make them uh, allow yourself to get to the other side of that, whether it's a problem, whether it's just a major milestone that has a lot of work to get it done, construction project or whatever it may be.
mm-hmm,
For me, it's about picking apart the pieces and identifying um, the the pieces that, when put together, will make it achievable. And you just need to tackle one accomplishment at a time. And if you just go after and achieve each of those accomplishments, the entire thing will be done when you get through the effective process for whatever it is, whether it's a new construction activity, whether you got a really bad move out situation with a tenant and you've got somebody else that needs to get in there. All of those types of challenges, whether it's financing right now and trying to find the right connections and networking through different individuals to find a financial solution to recapitalize or readdress a particular problem asset. You just got to keep after it and know that there is a solution, and when there's not, recognize that also, because not everything is going to be a positive outcome. We don't win at everything we do,
mm-hmm,
but you just need to also recognize that you need to contain any one thing you do to. I like to say, you can't put all your eggs in one basket. So
mm-hmm.
I like to say, make sure you're diversified enough that any one thing doesn't end your world.
Yeah, hands down. I love it. I love it. Guys, you heard it first. The great Jeremy LeMere. Jeremy, thank you so much for coming on, man.
Awesome. Thanks,
Guys, if you
Terry.
have any, no, thank you. And for anyone listening, I'll have the links below to Jeremy, how you can reach out to him, the website, the email, everything in between. Um, Learned so much today about self storage, commercial, multifamily, all the stuff that goes into it. Jeremy's the real deal, guys. So please reach out to him. Until next episode, peace out.
Super. Thanks, Terry.
Thank you.